Hi there! In this series of lessons, Trade Academy will guide you in real time how to start investing successfully. All you have to do is commit to spending 15 minutes a day reading one lesson. 15 minutes every day. That's all it takes to take control of your finances. And we'll be right here to guide you throughout your journey. But first, we need to answer the all-important question. Is the market really just a giant casino? Is it playing dice with some fancier tools? You'll find out the answer to that question at the end of this lesson. Now, I know the market is a confusing beast. Numbers flying all around you. Some days the market is up and the other days it's down. Now, this lesson is going to answer 3 crucial questions every beginner has. How do you start? How much money can you start with? And how much can you earn? We'll also answer the all-important question, can we actually make a regular profit? I will show you how, without charging you anything for it. As you know, Trade Academy is completely free. We believe that financial education should be 100% free of cost and accessible to everyone. That way, if we teach something and it is available for everyone's scrutiny and contribution, we can all grow and learn from each other. So, how do you start? First, you need to get your finances in order. Now, before you even start investing, you need to know how much surplus capital you actually have to invest. Now, investing all your savings is a bad idea. You can head on to the Be Your Own Financial Planner course on tradeacademy.in. It's also available on YouTube. Now, in that course, you will learn how to budget and plan your expenses. Next, you will learn how to buy health and life insurance. It's perhaps the most comprehensive guide on personal finance on the web. Best of all, it's completely free. Now, by the end of the course, you'll know how much surplus you have to invest. You would have planned your expenses. You would have created an emergency fund and bought insurance for yourself and your family. You would have also invested some amount of money in mutual funds as well. Now, the money that is left over, that portion can be used for investing and trading. Slowly, as your corpus grows, you'll have an extra stream of income and you can reallocate your wealth. So how do you start after that? Now, there are quite a few ways we can invest, but where do you begin? Now, I won't give you all the options and confuse you even more. Here's the best way to learn. There are 2 ways we can invest or trade in the market. One way is by using technical analysis, and the second way is by using fundamental analysis. Now, for technical analysis, we analyze the price of a stock over a period of time, hoping that the price movement reveals patterns of human behavior. Like 80% of the time, a stock that falls into a price ceiling tends to bounce upward from there. Now, these analysis tends to be probabilistic in nature, and we use that to our advantage. The second way is by using fundamental analysis. Here, we analyze the financial statements of a company over a period of time and try to predict if the company will continue to do well in the future. Like a company that is selling, say, motorcycles is growing its revenue every year consistently. Trends also show more people are buying motorcycles, maybe because they're cheaper, they're more reliable, or they have better mileage. Now, we buy the stock thinking that in the future, the company will continue to grow its revenue and its stock price that is, will increase as well. Now, how much do you start with? This is a question we get all the time, and I'm going to put a number on it. Rupees 5,000 a month. That's a great starting point to begin learning how to invest with equities. Since you can buy as low as 1 share, you'll be able to get a taste of what your analysis gives you after you trade. Now, once you're successful, you can graduate to more frequent trading if that is what suits your style. But trading, you see, requires a higher capital since it's more risky. So a capital of 3 lakhs is the minimum you would need to trade with. Finally, how much can I earn? Now, this is a tricky question. Everyone dodges it, but I'm not going to do that. You can aim for 15 to 20% yearly. This may change from year on year, obviously, but this is a good place to expect a return. If you're looking to buy to double your money or triple your money, then Trade Academy is not for you. 100% return also means a possible 200% downside, which is never good. Now, having lowered your expectations a bit, let me give you some good news. Certain trending months can yield upwards of 25%. However, that's something you should not count on. Protect your downside and have a realistic return expectation. Now let's start with some real examples. I'm going to use a method called the Newton method that can be applied on all time frames, meaning you can use it for a long-term duration investment, or you can use it in intraday. What I'm going to do is going to share the results for the first 7 Nifty stocks and list the profit or loss in percentage. Now, 2015 was a difficult year, but 2014 was amazing. But for an example, I think let's start with the least impressive year. That's 2015, Newton method on a long duration investment. Now remember, this is not an indicator of future profits. And by roughly day 10 of this course, you will be able to apply this method to stocks and know exactly what risks and rewards of the stock market are. Then, first we have Adani Ports. As you can see, there was only one trade and you have an exit at 10%. Axis Bank had 2 trades, 1 profit, 1 loss. You'll notice the loss trade is smaller in size as compared to the profitable trade. Then you had Ambuja Cements, which is 1 profitable trade, Asian Paints, 1 loss. BPCL had 3 trades, 1 of which were break-even and the other 2 were profits. Then comes Dr. Reddy. It's a very good trending stock. You have 3 trades here, 1 of which is break-even, 1 is a loss and 1 is a profit. And then there's HCL Technologies, 2 profits and 1 loss. As you can see, like any trading methodology, this too has its ups and downs. But overall, you will be able to beat inflation and FD rates, which I think should be your benchmark. Over the next few days, we will learn basics about stocks, learn the difference between 2 investing styles, and delve deeper into trading strategy, the results that you just saw. Thank you very much for tuning in to the opening lesson. If you have any questions, comments, or ways we can improve this setup, feel free to post it in the discussions below. We want to create a community of traders who can learn from each other. I'll see you in the next lesson.